yes, 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 yes. What's going on, man? Let's tone that down. What is going on, man? Let's pause that. I really dig that song. Hope everybody can hear me on YouTube. I've noticed my volume's a little low. I'm trying to work on that. It won't let me. I need to get a better mic set up, man. That's what I need to do. Let's check in on the stock market. It's like, man, where we go from here? So much for the Santa Claus rally. There is such thing as seasons and times in the market. It's a lot of trouble trying to figure them out, but they are there. What is this? Let's look it up here. Let's pull up the SPY, man, see what we got going on. So we got an update today. We're underneath the 200-day moving average. We know that's a value sign. That's an indicator, right? That's what these are. That's what these charts are. They're not necessarily predictive of the future. They're just indicators. They're just kind of letting you know what's going on, man. And, that's what we have, right? Indicators are there to help us. It's a tool. It's like a hammer to a carpenter. It's just to give us ideas. We don't know where things are going. I don't know. I know what they look like. If you have the money flow on page 124, it's entitled, it's chapter 7, Position Size and Risk Management. The process of identification, analysis, and either acceptance or mitigation of uncertainty in investment decision making. Essentially, risk management occurs anytime an investor or fund manager analyzes and attempts to quantify the potential for loss in any investment and then takes the appropriate action or inaction given their investment objectives and risk tolerance. Inadequate risk management can result in severe consequences for companies as well as individuals. For example, the recession that began in 2008 was largely caused by loose credit management of financial firms, meaning they lowered their standards. And you are definitely the CEO of you, man. This year's gone fast. I asked a young man yesterday, what kind of 30-year plays you got going on? I know about the short plays, man. Talk to me about the long play. You need a long play going all the time because you're going to live a long time. So you're going to get there, man. So when you get there, make sure you paid yourself. Don't even think about it like retirement. Think about it as just stacking, man. If you got my free ebook, your retirement, where is it at? What chapter are we in here? In chapter 8, man, the book You Don't Have to Die Broke, if you have this. If you go to chapter 8, it's free. Go get the ebook. Read it, man. There's a section on retirement fund. And really, man, we could cross through that word. Shit, I'm going to do it right now. Let's cross through that and just put your millionaire fund. Let's call it that, man. And it's like, now we just got to put time on it, right? If we know a few ways, we know a few strategies. And it says your retirement fund is the amount of money you need to have to retire comfortably. Well, shit, let's change it. Your millionaire fund is the amount of money you need to have $1 million, to have a net worth of $1 million. And that could be in different things. And we could have that chapter we were just talking about over there in the money flow is about risk management, adequately managing the risk of each position, each piece of property, right? Each job, the transaction, the value transaction we're taking. There's only a couple ways to make money, man. Your time, your talent, or your skill, right? And then once you have money you don't need, you can come over here. So if I'm following the money flow, a lot of my friends like index-only funds. Good. I'm not against index funds. I own a bunch of the S&P 500. But shit, when do you want to buy it? Up here? When you say, well, now I'd like to buy it cheap. Well, what's that mean? Like you need a way of defining that. And so you need a pattern. You need a way of repeating it, man. And that's the only way you make money in sales, right? You got to have a way of creating something and repeating the process. You got to be able to create your product, find your customer, and put it in their hands, and then ship it to them. And if you can figure out how to do that in a pattern that repeats itself, that works over time, then you make money. I mean, that's investing too. I mean, what you're doing's got to be repeatable. This is a chart of coffee, by the way. Brought my attention to it is how low it's trading below its 200-day moving average. See it? So that's technical stuff. Some people, I call that a skill set. Being able to look at charts and analyze them is skill set. Right? But so is risk management, the process of identification, analysis, and either acceptance or mitigation of uncertainty in investment decision making. I mean, what don't you know? You going to buy that building? What don't you know? What about the pipes? When they do them? Any sort of rules on this street? Can you not do this? Can you do this? Can you not do this? What about flooding? Does it flood? Do you need, the list goes on and on. What don't you know, man? That's what you got to know if you're going to make a deal. Well, if you're buying a stock, what's it worth? What do they do? What do they produce? What do we know about it? Why do we think coffee's cheap? I don't know. Go look. Why is coffee cheap? And the reason, whatever the reason, that's why it's technically trading below this yellow line, which we know a lot of things when they get below it, just through the reversion of mean, meaning prices go too far up, then they crack, they come down, move down, whatever, pull back, right? And prices go too low at times. And they swing in this pendulum of trying to find true value. And it's like, I don't know, what's the price of a coffee bean? I don't know, what's the price of the S&P 500? Well, it's based on next year's earnings, right? And I don't know that. I don't have any way of knowing that. But here's what I know. As I began to watch price, I began to see what I thought was a pattern of the way it would move, man. Yeah, and some of it you're looking back to create the pattern. And the guy says, well, you're just looking at the past. That's it. That's all you can do, man. And what I began to notice, it just kind of floats, man. And it's trying to find that overvalue, undervalue, what is it in? And all this stuff takes time, it takes a lot of time. It moves fast, but it takes time for hedge funds and insurance companies and banks and investors and hedge funds and private offices and day traders and all these people that get up every day to come into the stock market. And they're going to move it, man. They all think they know what's up. And everybody's looking at it from a different perspective. So if I watch the S&P, man, what I'm looking for, if I'm an index buyer, which is a no-brainer, by the way, when this thing turns down, you got my interest, right? That pattern of downness. Why? Because if I'm going to be buying this over time, what am I going to do? Buy it up fucking here? If it's a repeatable pattern, maybe it's not. Maybe it's just, to me, maybe it's not real. I don't know. Pull this back some. And so one of the indicators that I look for that it's possibly a bottom, besides just price moving below the 20-day moving average, is I'm watching this thing, the RSI. And this is an indicator, man. And all it's kind of telling me, and it's not perfect, but as we combine this with other tools, right? And between those two lines is a lot of movement. And as a trader, that might be of interest to me, right? Trader might make some money on this. He might short the market. You say, well, that's not my thing. I'm just trying to buy it when it's good and it's on sale. Okay, cool. Well, we know when that is. It's way below the 200, right? And those indicators that say it's gone too far go down. I don't know if it's a bottom, but it's probably a bottom or a temporary bottom. If you just make a habit of buying bottoms, that just sounds smart. If you went forward, if your 30-year plan was to just buy bottoms, that's okay, that makes sense. That's better than chasing meme coins, right? Come on. So this pattern that I watch could be used a lot of ways depending on your time frame, man. Man, what a candle right here, huh? God bless. That is a reversal candle, man. Look at that thing. Boy, it didn't get much clearer than that, huh? That day right there. You get moves like that. Just have a little sidebar for a second. We call that back in the box. And when you get shit like that, where it broke support, and that support was we thought pretty solid because it had stopped here before. And if you notice, that's kind of a visual representation of that fractal pattern that I try to follow. And I think I'm pretty good at spotting it. I'm not perfect. And I have my little rules. There's 4 bars part. We got to get that. We got to get the. I can't explain everything every time I come on. But as I'm finding these, and this reversal back into the box here, of the previous box is super powerful in the world of the money flow, especially when I've got it trading below the 200. I get that reversal pattern, and it's this, and it's around something that's already undervalued. It's just like you got fundamentals, technicals, everything lined up. You got a tradable bottom, and there you go, man. Then it's just up like, what's your time frame? What do you want to do with it? The investor might be accumulating. The trader might be buying the pop, right, and trying to sell into the momentum. And the investor up here may be like, well, I'm just going to get a little of my money back so I can do another deal over here. And if I get 2 or 3 of these, I could keep some. But the part I peel off, that little bump that I made on the way up, I'm going to keep a core. And that first takeoff, the core is what I leave on. That's my core holding. And then it may be 2 years later or a month later, or maybe who knows how later, before it comes back on your radar because it's a 3 and not a 1. So if it's not undervalued and the setup's not there, I'm just holding it. And that's how an investor uses trading concepts, of targets. Page 25 of the 125 of the money flow says the first decision in trading is what to trade. Once you've decided what you will trade, your second and most important decision is the size of the position. Now, along that lines, if we were thinking as investors, that might look like different types of investments. Are we going to spread ourselves around? We're not going to be in just one thing, right? Let's see. Hold on. I had to block somebody. So anytime you enter a trade, from the perspective of the money flow, it's like position size in relation to how much money you're trading. You never want to be any one blowout, man. Can't have any blowouts, man. I mean, you go back into, you don't have to die broke. That's rule number 1, right? What is it? We don't want to lose money. When Buffett talks about that, he's not talking about your account balance going up and down. He's talking about blowing out, losing money, like 0. His account balance goes up and down. Here's Lyft. We had this out as a trade, but I've been accumulating it. I'm doing both sides of this. I have some on as a trade in my trading account, and I'm accumulating in my buy and hold account at the same time. And it is tried to go, man, and it just can't. Look at that. That is weak. It's hanging in there, man. It's hanging in there. We'll see. Morningstar's got what does Morningstar got on this? I mean, at some point, they got to bring this down, right? Morningstar's got a $55 fair value, meaning it's undervalued by 81%. Now, that's according to Ali Mogaharab, equity analyst, senior analyst, and you can go read up on who that is. So, I'm sure TipRanks covers it. I'm sure other firms cover it. We shall see. It can't go up if the market's going down. That's the wind. So go look at the S&P right now. Where's the S&P? It's in a stage 4 decline. Where's price? Price is trading below the 5-day exponential moving average. Exponential average is pointing down. 10's pointing down. The 20's pointing down. TSI's pointing down. MACD momentum indicator is pointing down. Stochastics is pointing down. Everything is pointing down, man. There is nothing pointing up. So this is in a stage 4 decline. So as a buyer, as a buy and holder, I'm looking to pick up some down here. Is that the bottom? I don't know. Looks like the way it does when it is. We'll see where the indicators are. So I'm looking for that RSI to go extreme and price to stop. And what? My indicators start giving me some momentum to the other way. And then I could take a shot, man, as a trader, right? Risk management, go back a chapter. What's my shot? What am I trading? I don't know. Depends on how tight you want to get it. So if I was trying to trade the S&P every day, I'd be looking for moves up. If I'm a day trader, that's what I'm looking for, up moves. If I'm a buy and holder, I'm looking for it to stabilize so I know I can put some weight behind this. And then if it breaks down, good, whatever. We'll do it again down here. You know, so if a guy's accumulating, let it come back in. Do the same setup, man. That's your setup. That's your buy signal. That could take a couple weeks. So, but once the S&P 500 turns down, all stocks are going down, even the good ones. So, well, there will be a few that buck it. Look at, this is Kohl's. We started buying this in buy and holds. Or I did. So look what we've had going on here. Pays a dividend. Significantly below the 200-day moving average. I don't own a bunch of retail, right? And, you know, I do a little reading on it. They look like they're doing all right. They're trying. It's significantly below value. So if I come over and look and I say, okay, what do we think it's worth, man? And they don't know. They're just giving you their best estimate. They went to college to do this shit. 53% discount, $54 fair value. Then they throw their reasons why. We can go through and read that. Right? How sustainable do we think the dividend is? Risk management. So we start reading on it. Yeah, I could take a shot at this. Now, what I would like to do, and what I did before, is I established this position with profits or gains from oil plays last year and the year before, where in Exxon, Conoco, and Chevron, we were buying stage ones in oil when it was significantly below that 200-day moving average. For when? For when it would, to trade it when? To trim it. Well, when it's overvalued and above it, like that's ideal. So this could take 2 years on Kohl's. Or a month, I don't know. I don't know, it might rip. But in the meantime, it's going to pay me until they can't, right? Now, if they bust that, that's the risk. That's why you don't go all in on one stock. You know, you may love the stock, but maybe they don't turn it around. Maybe the company has another misstep. Maybe something else goes wrong. Like, it just gets worse and worse. I don't know. But that's the risk of investing, right? You got to analyze that. And the way most people protect themselves in that scenario is through diversification. It's one of the reasons I like the dogs of the Dow. It's a strategy. It's older than me, 100 years old. It's based on the 30 top companies in the world. It's the 5 that have the highest dividend yield that haven't done the best because of a reversion to the mean, meaning whatever's of value now, if it's a good company, it's undervalued. At some point, it becomes a value. People step in, start buying it, and it gets pulled back. So a lot of times the stuff that didn't do so good last year ends up doing well this year as people look for where's the opportunity. And that's that movement of price here, and that's what this is. Man. So I'm not ready to hook on this today. Look at the RSI. I think we're close, though. So I need to be thinking about this. Okay, that's coming in. It stopped here before. I'm now actually, I was up like 15% or 14%. Now I'm back down, so that's good. I'm back below. I didn't get a lot of shares before it ran last time. If you remember, we were buying, and then it started to run, and it got up into here. Well, shit, up in here, that's like $8, $6, $7 higher. Well, the good thing is now we're back here again. I mean, I didn't want that to run. I only had 65 shares, man. So now's my shot. Like, so over the next few months, as I watch this, I need to go read, make sure if the dividend's still good. If that becomes in question, maybe I wait, because a lot of times just cutting a dividend wouldn't necessarily make me drop a company. Ford cut their dividend, now it's back. You know, a lot of companies, Conoco cut their dividend, and then it was my largest winner this year. They cut their dividend and went all the way to $22. I sold some at $122. 2 years later. You can't do that unless you can ride the money flow. And you're like, well, when would you have bought? When would you? If you didn't have a repeatable way, if you didn't have a fractal pattern, if you couldn't look at something to determine that, if you had no way to judge value, when would you have done that? And the only way to do that is to actively put your mind onto that. So the only people that'll ever profit from this are people who look at this and read about this and then engage with this, right? And add it as part of their life. They're looking like, where are these things? Where are REITs right now? Where's AG&C? Look at this. My God. Whenever this thing, whenever pulls below this 200, it is pulled back to it. Now, the 200 is slowly changing too, so you notice it came down with it. I know that. The pattern don't mean where, like, you don't get to determine that. There's some things I tell people. They'll be like, well, RSI is extreme. Should I sell some now? And I'm like, are you trading it? Do you need to raise money? It's like, yeah, but I'm underwater in that. It doesn't care. Nobody cares about that but you. Meaning that even if you're underwater, like, you get what I'm saying? It's going to flow and it's going to move, man, and it's pattern. And then it may top out and then come back down. It doesn't care. Now, if you're accumulating, then great. You don't need to. Let it come in. But even then, see, look, it never got extreme, man. It never got extreme. So what is that telling you? If you're looking at AG&C right now, and it started building a stage 3, if you follow the money flow, you know what that is. Look, it started to build it, man. Here's the one. That move there was back in the box. That's super. We just talked about that. There's the breakout, right? Where's our target? I mean, it's got to be around the 200 RSI if you're trading. But if you're not trading, if you're just a buyer, these is when you're buying, man. You're buying that. Are you buying up here? If you're new, maybe. You know. I mean, I'm not, because I was buying over here. But if I was just getting on the boat, maybe this 3 becomes a 1. And it easily runs up into here, right? Previous high, which would be what? The money flow pattern of going sideways, running up, and it went sideways, and hey, it rejected selling off. It worked off the thing. It just said, nah, we're not doing that. So it got rid of that. It worked it off, and then it just broke out again and ran again. And that happens. That's what oil did. That's what some things will do, and they'll do it to the upside and the downside. That's the unpredictability of markets, man. That's the risk of trading. That's why we have to have position sizes, why we, and investing. That's why we have to diversify. God, what a beauty. I had a kid. I say kid, fuck, I don't know. He may have been an 80-year-old man. We were going back and forth on Instagram about selling AG&C and the REITs in here. Because, that was a real sell-off, dude. Sparta. It's hard, man, talking to being to your friends and being like, bro, you should be buying that, man. And they're like, yeah, but you send that right up here, and now it's all the way down here. And I'm like, I know, man. I don't know what to say. I said, I'm just telling you what I'm doing, what I would do. Where's it at? Hold on. Let me pull you up something. Hold on. Oh. This has been page 13 of my newsletter for like 3 years. At least 4 years. Yeah, you'll see. Where I talk about I'm accumulating $25 to $100 a day during any stage 1 accumulation zone. Meaning if any day of the year of the week, you're like, what are you doing with AG&C? We're buying it. Part of our family investments. Like, this is one of our larger positions, is accumulating mortgage REITs when they're lower. But not just mortgage REITs, other REITs too, man. But this is the one I show in the newsletter so people see what I'm saying. So then if you come over here, where's it at? Hold on, YouTube. Calm down. If you come over here, right? And you'll see. I'm sure it's on here. Let's find it. Where's it at? Right here. These are some of my larger. So when this thing goes and triggers that, I just go into accumulation phase, man. BX is on that right now, right? Verizon's been on that right now. Pepsi is not on that right now. And as we go down the list, so that's what I'm doing. I'm kind of calculating, or we got to dig into the dividend. How much do we receive on it? Let's, do which we want to be diversified. I don't want all my money in Welltower. Welltower has a nice dividend. I think it's going up. And if it's on a stage 1, I'm interested, right? So if I come over and I'm looking at, it's part of assisted living. I got about 30 grand in this shit. And you're like, why? Well, if it gets below this 200 and goes into a stage 1, then I'm interested in picking some up, man, right? That's when I'm interested. I want this RSI extreme. I want big moves down, and then I want it to stop. And then I need to go look, is it Dow jumps more than 200 points? The zero line. So I keep them on there not to confuse people. Maybe I confuse when I re-explain it. But the histogram, that graph is showing us momentum. That's all it is. It's saying, so when you have a bar above and then it ticks down, you can draw a line. That means momentum is now pulling back. Does that mean you need to do anything? No, but it doesn't. You might need to be aware. Momentum to the upside has slowed down. Okay? So the single most, in my opinion, is RSI. That's why RSI is on top, because I want to make sure you understand this is the most important indicator. You have to respect it. All we're looking for is the extremes. When it prints above, it'll go green. When it prints below, it goes red. I really don't care too much about the middle, other than once you're above 50 and buying the stock. Why? There's not much more room. You get what I'm saying? Because at 70, I'm going to start selling it. So if you go look at a stock and it's on a 63 RSI, most of the time I would say don't buy that. Now, there's exceptions. Man, oh man, oh man. GP, what are you saying? So it's through that repetition of respecting each component part, right? It's the indicators play a part, but guess what else plays a part? Position sizing plays a part. What else plays a part? Diversification plays a part. So the only true passive money in the world is investing in companies where you don't take a phone call, you ain't got to sell shit, you're not at the business meetings, and they just send you money. Now, I don't know about you, but you got to have some way of allocating those. And that's what the dogs of the Dow is. That's a strategy people have used. Buying index funds is a strategy people have used. Getting in mutual funds is a strategy people have used. Those are okay. You're paying a fee, and if you want to allocate money to that, do that. There's nothing to keep you from watching companies. There's nothing to keep you from, you could mimic Warren Buffett shit if you wanted, or just give your money to them. They got that fund. There's nothing to keep people out of that. They're like, oh, look at you. You're a young Indian girl. We can't let you into the Berkshire Hathaway fund. They'll take your money, man. Everybody will take your money. Or you could manage, you could do some yourself. Nobody's keeping anybody out of these games, man. But Gerald, let's see. Look at this, man. As a trader, stage 1, 2, 3. And what do you see setting up? Is it there yet? No, man. But man, if you know about this, from chaos to cash, Welltower pays a nice dividend. Look where it's at. It's below the 200. Oh my God, things are setting up. Let's see. Let's check it out over here. What do they think over at Morningstar? In case I'm wrong. Oh shit, they give it that 5-star rating. Well, is significantly undervalued at 34% discount. No Moat Welltower reported third quarter results that were mixed compared with our expectations, though we didn't see anything in the quarter that would materially change our fair value assessment of $97 a share. Same store occupancy improved 110 basis points sequentially and 390 basis points year over year. In other words, the company's doing pretty good. But because interest rates are getting hit and because the S&P 500 is in a downtrend, guess what happens? Undervalued assets like this go into a downtrend. And me and you get to watch. And so as I'm watching this, GP's watching this. Now, come on. Doesn't it look a little bit like this? Let's clean it up. I mean, you can see it, man. Man. Look. You can just see it, right? Are you making fun of me on YouTube? Jonathan said, also like the video, you greedy bastards. GP, the chicken is on sale. TSN, yeah, he's talking about Tyson Foods. So Tyson Foods is probably trading below the 200 too. So all you accumulators, man, this is when you get to put in work. Now we get to see if you just been talking shit or if you're going to walk it. Let's see. It's hard to walk it sometimes. Is this Tyson? Yeah, it's Tyson Foods. It is definitely below the 200, man. I don't have any of this agricultural stuff like this. So maybe I decide, I don't know this. I didn't see who said it, but let's just real quick. Let's say I'm reading a Barron's article and they mention it. I'd come over here and I'd put it in real quick. TSN. Let's see. Oh, shit. 5-star. Significantly undervalued at 40% discount. Although Tyson's fiscal 2023 sales guidance looks out of reach, the stock appears undervalued after No Moat Tyson's physical fourth quarter results. We don't plan to make a material change. So just it is what it is. They made money. $53 billion. Stocks in a down move. A lot of stocks are. At some point, I don't know what the dividend yield is on it, but at some point, man. So there you go. Now, I bet there's some dude that works in the chicken business, and he's like, I don't understand stocks, Gerald. I don't know how the stock market works. And it's like, really? You're in it. What do you mean? You work at Tyson. You're part of the stock market. You're just on what's called an earnings report. You're on the wrong side of the cash register. You're what's called a dividend payment because all you're doing is buying shit. Everyone's in the stock market. I have to remind my real estate friends of that. They're like, oh, I'm not into stocks. Yeah, you are. You give me my dividends. You're in it, bro. You're in the real estate market, by the way, too. You'd be like, oh, I'm not a real estate investor. Yeah, you are. You pay rent, don't you? What do you live free? You're in the game. You're either getting paid or paying. It's up to you. Boy, that is beautiful. Look at that little bitty, now we're headed down. I don't know, man. I don't love the chart here. I'd give this a little bit of money. Oh, you guys are in the real estate game. You just might not be very good at it. You're like, yeah, but I'm getting my house with 3.5% down. Okay. You're just not good at it yet. We can get you there, though, if you ever want to learn. Ooh, bonds are selling off. We were talking about that this week. Got a sell signal on bonds. Look at this. Stage 1, there's our breakout. It ran up, started coming over. You know, if you own a house and you're paying a mortgage, you are actually your tenant, by the way. You are the tenant, man. I was just talking to my wife this morning about that. I was like, you're your own customer, man. You can make that place an asset, or you could buy it all fucked up and mess it up and get it wrong and take equity out and jack up the whole deal, or you could build equity and have an investment in real estate while you're running your business and investing in the stock market over here or doing this and that, man. It's like also part of the equation. You ain't got to live there forever. So bonds are selling off, man. Where do we expect them to come? Down in here. How would you play this as a trader, by the way? Bonds, one of the big 7. How would you trade this? The reverse, TBT. Oh man, look out. We got a breakout, baby. So this is a stage 2 breakout in the money flow, right? This is the inverse of bonds. So if you wanted to short bonds, there's your stage 1, you would buy this. And it broke out in a bump. So good chance it pulls back into here and you get a chance to get this short going a little cheaper. But maybe that don't work. Maybe it don't come back. So if it's me and I'm trading, I buy a little there with the expectation that it's going to come back a little and I'm going to get my cross, man. And where would it run to? Same place I would expect a short on the S&P, meaning it's just the money flow, right? It's just the flow of price. I don't know. I just know what the pattern looks like. So when it runs, I'm expecting it to go to the previous high, just like it did over here, right? Previous high. So as it ran through the pattern, previous high, man. And then it keeps going. Good. Maybe we'll do that over here. Previous high, and then it keeps going. You know, or maybe not. Maybe it's just a pullback. But how did you know that it went too far? Well, what's the inverse of this? The actual bond position. Now, let me give you an example. Let's say you're in a growth stock and you're like, but I'm underwater. And it's like, I know. It's trading the 4 stages of price movement. So if you're in something and it goes to sell off, and what if it does? What if it does the pattern? What if it does? What if it goes sideways, runs up, goes sideways, I downsize it, it comes all the way back down to here? Well, fuck, I can put it back on. I can buy some. Maybe with that money that I'm not writing down for the next month while this thing goes into a stage 4 decline, to then only turn around and run back up again. And maybe in February, we're up here at 120, but during that, it went sideways, it ran up, came over, went down, went sideways. Well, inside of that is hundreds, if not thousands of trades for micro traders or for day traders. That could be 2 or 3 trades a day. For swing traders, that could be 10, 15, 20 swing trades. For a buy and holder, it might be 2 buys or 1. And they're all on this same pattern, man, of just price movement. And so you could have bought a stock at 100. It falls to 50. It goes stage 1, right? You could buy some. It runs up, gets to 80. It goes sideways. It comes back down. It breaks the previous low. It stops. It goes sideways. Then it runs back up. It hits the RSI. It goes sideways. It breaks back down. That's the movement of price. You know, and just because you paid one price for it don't mean you can't work around the movement of price or trade around your position. So think on that, man. And if you're just going to add to lower your price, then just do it when it looks like it's a bottom. It don't even matter if it is, right? I mean, if the idea is just to lower your price point, I don't know why there's not more people talking about that. Like if I'm in PayPal, I'm not throwing it in on PayPal, man. I'm thinking like, okay, how do we lower this? And it's like, well, I'm looking for ones, man. Looking for ones. I'm not looking to sell it here. Fucking RSI's 28. Let me remind you what I'm saying. If you come over here, I would say the same thing to you, right? If these points, you can see them. Now, that one didn't quite hit it, which is surprising. But you can find the ones, right? And even though over here, that one isn't the lowest low, but you see ones, right? These are buys. And then what the highs look like? Same thing, man. They run up. They're the opposite, right? That RSI extremes, and it starts to go sideways. So based on what I did from here to here, people will let that they paid up here not let this happen. Like either they don't buy it here. What they don't realize is this to this, back to this, and back to this, and back to this. All that is this. You get what I'm saying? And so if a guy just ran into PayPal today, and I'm just grab that one out of the universe, he's playing this hand. So you go in the casino and you're like, man, I lost big yesterday. Nobody cares. Nobody at the table cares. It ain't going to change the cards. Like you got to play the cards they're dealing right then. You play the interest rates that are today. You play the stocks that are here today. Like this is the game you're playing right now. And long term is the daily. I mean, if every day is a 30-year play, then every day is a 30-year. You know, get what I'm saying? If every year is a 5-year play, then every after a while, every day you're reaping the rewards of a 5-year play, or 3-year, or 1 year. A predetermined point at which point an investor will exit a trade in a profitable position. Chapter 8, Money Flow, Locking in Profits. Profit targets are part of many trading strategies that technical traders use to manage risk. Before an investor enters a trade, he determines a profitable exit point at which he might sell out of the position. Investors too. Meaning, I like to trim the first runs. So if I take a position and it runs and bangs RSI, I might take some down. Meaning, I'm planning to keep it another 30 years. Let it come down, I'll put it back on. A profit target can be expressed as a dollar amount or a percentage return. Developed by J. Wiles Wilder, the Relative Strength Index is a momentum oscillator that measures the speed and change of price movements. RSI oscillates between 0 and 100. According to Wilder, RSI is considered overbought, in other words, take profits when above 70, oversold when below 30, buy signal for investors, or bottom for possible trades to the upside. Signals can also be generated by looking for divergences, failure swings across the center line. I don't get into all that shit, but you can go read what Wilder used to do. Look at Campbell's soup right now. Oh, stay with me, man. I know you're falling asleep. Look at Campbell's soup, man. I've been playing this money flow game with Campbell's soup for many years. Now, if we look, if we just step back and we look at in past, just look at the past. I mean, what is Campbell's, how often does it blow past that? It's pretty close. It runs for a minute more, doesn't it? Now imagine if you're breaking this down on the 1 hour chart, you're going to have a lot more of these bars, right? It tends to not go much further. Now we'll see. Now, what if we lay that against what they think it's worth? Oh, shit. Campbell's soup is fairly valued, trading at a 3% premium. Since joining Campbell's in January of 2019, CEO Mark Claw's tenure has been fraught with change. Not only has Campbell parted ways with its fresh business and the bulk of its international operations, while also working to steady its core metals, meals, beverages, and snacking arms, it has also navigated a global pandemic. Bam. So if we're looking at it now, it's trading at a premium. We know when the money flows like take profits, right? If there's going to be some taken. That's chapter 8, by the way. Locking in profits, put money in your pocket. A predetermined point at which investors will exit in a profitable position. Profits targets are part of many trading strategies technical traders use to manage risk. And then we go on and talk about it. Now, from a fundamental, it's hitting that, right? Because the company's actually trading at a premium now. We don't want to stop it, but if I wanted to raise some money, this is the kind of shit I'm looking to sell. I want to take some off. And it's been successful. So at one point, I was underwater 22, 24%, I think, in this. And now we're hitting our profit zone. That's taken a while. Let's back this up, man. Go to a weekly for a second. Yeah. Look at this. Let's go to a monthly. Man, this thing's had a run, man. Not fast and furious, though. This is a monthly chart. Look at that. Runs up, gives back half. Running up. This has been a good one, though. But it's funny, where it's stopping right now is where it stopped before, man. We know that. Price has memory, right? That's how we create support and resistance zones. So, we can't deny this. Stop there before, stop there before. RSI is extreme. It's stopping here before. And fundamentally, it's at fair value. It's like, okay, how high are we going to take Campbell's soup? Is this the next Dogecoin? It's like, I don't think so. So if I've made some good returns and I need some money, this is a place where I could get some money, maybe and do some better. So I could roll some profits from Campbell's to what? Back over here into maybe well. And we said that's a 5-star trading undervalued. Is it set up quite yet? Nah, not quite yet, but I can roll some of that gain into a higher yielding stock that's set up like when I got into Campbell's 2 years ago where they were having a lot of fucking problems. And the thing got underneath the 200 and we started accumulating ones and collecting the dividends for the last couple of years. And now, bam, it's gotten better. They fixed shit and it's run, man. My man Doug says, currently doing 2 remodels. Hey, man, I hope you guys are doing big shit this year. Go get my free ebook. You don't have to die broke. I was just going through it. Go through it again, man. I'm fixing to do some audio readings for the Science of Getting Rich book. Let's, and don't forget, man, best trade is in you. Like getting yourself out of debt. This stuff gets a lot better and easier when we're doing it out of prosperity. I like to use my money to buy the safes. I was telling someone this the other day. Sometimes I do these things. People come to New Orleans. We'll get together. It's like, tell me what you're doing, man. And it's like, there's good ways to do everything. There's better ways, There's things you can miss. I was talking to a friend of mine that I called a green light, what I do, and he pointed out something glaringly obvious that I should have been doing that I wasn't even thinking about. But that's why I need to have those, because I can get tunnel vision. Maybe I'm seeing something one way, and if I talk to someone who's smart or done a couple things, they might have a different way, especially if they do it. And what he was pointing out is what he's been doing, and he's looking at when he's like, man, how do you miss this? And sometimes that's people, man, like the way they own their house or the way their cars are structured or the way they have their taxes set up or the kind of insurance they own or the way they purchase the house, the interest rate, or there's so many things that if you stop doing 1 or 2 things and added 1 or 2, the compound difference over 12 months, 24 months, 36 months, 5 fucking years is to the tune of hundreds and hundreds and hundreds of thousands of dollars. Buying one deal, buying one stock consistently, not a lot, but you're consistently for 2, 3, 4 years, and then it runs and it fixes itself, because some of these things are like the Titanic. You can't just fix Walmart overnight or fix a production line at Ford or something to do with, like, some of these companies are big, man, and it could take time. And it's like, how do you believe in you? It's like what blows most people out of investing is like their fucking lifestyle. They live so stupid they can't even do it. That's all it is, man. Their lifestyle. Something happens and they're like, oh, I need this money. And it's like, oh, that's convenient that you need it at the fucking bottom. So you're buying it. You're literally doing the opposite. Instead of being an accumulator, that's when people need it, And the truth is like they've lost in what they were doing, man. Especially as an investor. Like who was I talking to the other day, and they were like, well, I was going to buy this house, man, but it's probably going to go down. And I'm like, you like it? Yeah. Is it worth what it's worth today? Yeah. Your family likes it? Yeah. You can afford it? Yeah. You putting 20% down? Yeah. Okay. Buy it. You know what I mean? Like, you can only play the market you're in right now, man. What happens in 3 to 5 years? And you've been your own tenant. You made 36 payments. We're around the corner here. Based on that theory, would I sell all my properties? Like, what do you mean? Well, if it's not a good time to buy now, is it a good time to have any? If it's not a good time to buy, maybe you shouldn't own them. And it's like, that, to me, doesn't make any sense. I want more. I don't want less dividends. I want more. I don't want less rents. I want more. I mean, I don't know what other people are looking at, but it's like, to me, every day's a good time. It's just a matter of, am I ready mentally? Do I have the money? Can I pull the trigger? You know, am I disciplined? Can I take, have I done what I read there in the money flow about analysis? Have I analyzed it? Look at this one, man. And you know, maybe it's real estate. Some people can't do that though, but they can do this. Look at this. Dominion. This company's worth about I think it's $76. If a guy puts 59, I don't have 59, I'm just playing the game. If I got 59,000 in there, you know what my dividend is? It's pretty high. What if it gets back here? Then your dilemma is, well, shit. If I sell this, I'm not going to get that dividend. And it's like, yeah, but I would take some off, right? That's how I'd be looking at it. Like, I would make that plan right now if I was doing this. Matter of fact, I'd probably be like, I'm going to take some off here and here. Why? Because I'm lowering my risk into gain, because that's toward true value. Now I want to downsize my risk. The lower it goes, in my mind, the less the risk, because it's below the 200 and it's worth more than that. So if I come over here and I look on D, I mean, this one here, man, it's like, we've had 3 of these so far where it's like these utility companies. Because remember, FE fell 50% below value. So D's only 24. This was the one thing that I was like, fair value 78. I was sure hoping that'd be higher. But it's over the 200, right? Now, what sector is this in? So it's valued, it pays a dividend, it's on a low, it's on a stage 1. What sector is this in? You'd say utility. So let's go look. XLU, part of our research here. What's up with the XLU? It's on a sell signal, right? Trading below the 20. We closed our position in this. We're getting a crossover. Buy signal, sell signal, right? Sell signal, buy signal. That's just one indicator though. Where's RSI? Right? Sell signal. Momentum's where? To the downside. What? Still to the downside. So everything's saying down. So I got out of this. Happy to get back in. I just need it all to set up, man. And this is giving me this, not this. So I got to wait this out. Now, if it keeps going sideways, it may set up. And he's like, is there a target? Yeah, shit, it'd been here before. We could do that again. Well, if that's the case, let's say this holds, and it very well could. I don't know. It's held here before. Well, that's the sector that D is in, man. Looks like D's holding. So maybe it gets undervalued enough and we do get some wind popping. If utilities do run, the market is on, this thing could run. It could easily get up to 69, 70, right? So as an investor or as a trader, that's not a day trade, right? What is that? I call that chaos to cash, man. That's bread and butter. These are things that are bigger than me. They're bigger than you. These are big businesses. Apple's set up for this. And it's like, I don't know how much you want to do. I mean, I've always got some of these going. Coca-Cola, if it gets under there, Pepsi, BX is there now. After a while, there's so many good ones. You just like, fuck, I don't have enough money. So that's one setting up. Go read on it. Study on it. Don't take my opinion. Don't take Morning Stars. Look and see. All I'm trying to point people to is the pattern. And you lay it over what you want to lay it over. We could lay it over coffee, crypto, whatever, man. And then you just got to determine the game you're playing. So for me, if it dropped down, I wouldn't sell it. I would just add to it like we did here. Like if I entered the game here, when this happened, I'm not selling any. I'm going to let it set up, man. And then I'm going to go back to buy more. And if it takes 6 months, whatever, like I can get even more. That's how I play that. Or, you know, if you can't add, just hold and you wait. You're going to get your div. Eventually it's going to run is what I'm betting on. You know, we saw that with AT&T. right? So we saw it on AT&T, man. If we were buying this one, you could have made that a level. And then what? It did another one. Look, got extreme and everything. And then what? Did another one. All right. And then what? Back in the box. So whatever. Shit, done. You could have done it for another year and a half. And then what? And then it finally rips, man. And on this one, here's the crazy thing. What? Now we're in a down move. How far? I don't know. But if I'm looking to buy pups, I'm watching this. As long as that's down, it's going down as far as I'm concerned. And I'm just waiting for that to stop. When that stops, it tells me, okay, now I got to ask myself based on position sizing, diversification, is this something I need to have more of in my portfolio? And you're like, yeah, I want some more of that. Raise my dividend. Cool. Get you some. You just follow it, and every time it does that, get you some. I mean, you get what I'm saying? Like, it's not complicated. And just stay on top of it, man. Get $1 million in there. 5 in there. 5 in Wells. 3M. Verizon. You know, boom, boom. Let's see, where is Verizon? Yeah, Verizon's hanging in there, man. I like this zone it's in. It's undervalued. It's way below the 200. And now it's not even, it's almost like it's not money flowing. It's just, we're really just kind of drifting sideways now. See that? Like it started to run, it just couldn't do it. Now it can't do it to the downside. What is that telling you? It's just boxing, man. You'll start to see this shit here go sideways. This will go sideways. This will go sideways. And if it holds this, and it could just drift like this for a while. Just drift. You know, and that's going to come closer. And then at some point, it's going to rip, man. Something's going to change, and it's going to rip. So for me, if I'm watching this and I understand the money flow, I don't want to buy up in here. You know, anytime it's bouncing around down in here is where I'm looking to grab some. If I have money, if I don't, I'm just watching it, you know. And that's it, man. That's how the money flows. And if, as a trader, you know, I mean, being able to identify these zones, levels, like, I mean, it gives you something to trade off. And trade is risk. Trade is, if you're saying I'm trading to make money, then you got to have an entry, an exit, and a target. And it needs to run, and it's got to be duplicatable, and you got to be able to churn, man. You can't run a retail store if you don't sell shit. So part of trading is selling shit. You're not trading if you're not selling. So, or reverse, meaning if you're shorting, then you would be what? Covering. I'll end with this. Let's check on our short. And that's not investing, right? So don't get the two clouded, man. Get them clear in your head. Let's check in on our S&P short. We're using the SPXUS like a hedge, right? A short. It's the opposite of. And if you go look in the newsletter, I have my targets are $19 and $22, and that would just be a money flow pattern. And if the market does that, it does that. If we get stopped at, you know, at some point, some people are going to, you know, I don't usually do this, but a lot of people will move their stop up. They'd rather break out even than lose money on this. I don't know. I'll give it a little room as long as it's above the 20 and the pattern's there and the S&P hasn't built a base. And if the S&P builds out a base and looks like it's about to turn, then I'm probably going to take this down. But right now it's all negative, man. So I'll have the hedge on, and that's one way to hedge. And most of the time you're going to lose money on that because the market goes up most of the time, not down. Let's see. Yeah, I got to think Elon's the one in there selling Tesla. Huh? If you notice, I haven't mentioned it or talked much about it. I'm just waiting for this shit to set up, man. Look, I mean, goddamn. I'm going to go with it. I'm going to let it wait. We'll see what it does. This is, so far in history, it's been good to take the other side of Tesla like this, like to get on the sell-off side. So I'm going to stay with that theme. He's still rich. This is still a viable car play. Market's in a downtrend. Elon's in there selling with the market selling, which means index funds are selling. It means So yeah, there's the natural pushes to the downside. It could make this up in fucking 2 weeks. So we'll see. I mean, if I wasn't in it, I would definitely be watching Tesla. I am in it, and my only thought is accumulation, man. For me. But I own a lot of Ford. You know, as you get to play a stock, say you own Exxon, maybe this sell off, you don't buy Exxon, you buy Conoco. And then going forward, Conoco and Exxon are kind of competition with each other. And then, you know, 1 year you own some Chevron, and you don't really sell these, you just accumulate and you own them. Anybody that's done that with Tesla has a lot of money. I mean, if you took the other side of a Tesla sell-off so far, I could say the same about Amazon and about a lot of others, right? So I don't know. I'm surprised it's still going down. I'm in it. I have no intention of selling, but I don't want to accumulate here if it's going to look at the momentum. Everything we just talked about, right out of the money flow. Down, right? Where's the momentum? Down. There's nothing about this that says it's going up. So for me, like risk management says, why add to it? Like, let it go. If it's probably going to go down tomorrow and the next day. So I'm just going to let it set up. What am I looking for? At least some way of it stopping. But obviously that wasn't right. I mean, it wasn't the bottom there. It wasn't the bottom there. You know, will this one be? I don't know. You know, but that's how I do it. I mean, you know, I wait, and especially if this is a buy and hold, that's when you would want to do it. If you're a trader, I mean, what's the opposite of Tesla? You short it. I don't know. I tend to short. I did a class the other day on shorting Ford. Where did I tell you in that class this thing would stop? I'm like, I don't know for certain, but if the money flow pattern plays out like it does a lot, if I was short Ford, I take profits when it hits previous low, previous high, and the RSI goes extreme. Come on, man. I mean, hold on just a second. Because it's now a short position. A short position is a temporary trade. I believe that the markets go up 70+% of the time. That means 30% of the time the market's going down, and that's a very small window in the world of probabilities. Remember, the money flow is about a fractal pattern. If you remember that in the very beginning of the book, this marker's going dead, that I believe price moves in 4 stages, and that this is a fractal pattern. Fractals are infinitely complex patterns. It's an infinitely complex pattern, 4 and 1. These are fractal stage patterns. Okay, I hope that makes sense. I didn't go to MIT and I don't have a physics degree. This is just shit I came up with after studying hundreds of books in trading. Now, if you go look at the Ford chart, we saw Ford kind of topping out, and then it was coming down, and we had what we call the anchor point. All right, let's talk about what I was showing you there. Ford put in an anchor point. So if you're in MFG or you watched my class the other day inside our Discord, if you go over there to where it says shorts, I'm saying we had the pattern. Sideways up. The number of likes I got on that is actually pissing me off as I'm showing it. Well, on YouTube. As I was showing the video, the number of likes I got on that is actually pissing me off. I was like, man, I'm not going to yell this year. You know, the anchor point where price puts in the lowest low, stops. We have a low. The next candle comes up, holds it, and holds it. Well, in here, we'll have our anchor point. A couple bars in, we can have our possibility of a stage 1, and we have a tradable bottom if we're traders, right? And so as we watch these bars, we need 4 days to make sense of that day. And then what you hear me use the term boxes is kind of where that starts to come from as price starts to develop. So as price goes up, right, it'll stop and then it'll start to go sideways. It'll make a little box. And then it may keep going and we get, right? And so we know when we hit a target or RSI goes extreme, it doesn't mean the run's done. It just means watching forward and it's putting in this stage 3 and it's starting to roll over. And I'm just saying, hey, if I was going to short, this is what I'm looking for. Stocks that have clearly went sideways, clearly ran up, clearly went sideways. All right. So that was 2 weeks ago, our class. So here's our day that it actually broke the pattern. I was like, okay, this is when you add to this. So you have a stage 1, 2 ran up, stage 3, and then we're here. Now you may say, yeah, but I'm underwater here. And it's like, okay, but if you're trading, you get out, you go the other. If you're trading. So if the market goes south, this is going down. That's what we talked about, the wind. So if the S&P goes to the downside, I'm a trader. I'm looking for trades to the downside. And so as I'm learning that, I got to practice. You would do it small. So you would go find the pattern. Like this was the pattern over here, right? And once it's in, I know well, let's clean this up. So if I'm trading, my stop initially, how you want to move it is up to you as you go forward. Initially, my stop is based off not our anchor point, but our apex point. Down here was the anchor point, right? So stops were everything below this, right? So our stops were in this zone, meaning this wasn't a 1, it actually broke and now it's 4. But reverse up here. If we think that's a 3, well, that's only true if it doesn't break. And so as it starts to break, what is it doing? It's confirming it. So as you see me adding to a 1, what's happening? It's confirming. So the other indicators are confirming. TSI rolled over. MACD's to the downside. Stochastic had already done it, right? It's all confirming, right? That's where it's at now. But if we were looking at them over here, then it breaks. What happens? On this little run up, does that get me stopped out? No, my stop's way back here. But if it would have kept going, I'm out. I'm a trader. That's called position sizing and risk management. I got to protect myself. But otherwise, I'm just dancing with the girl that I got in with. I'm thinking it's a stage 3. It doesn't have anything to do with Ray Dalio or the fucking Fed or like none of that. It's just a stage 3 rolling over into a 4. I'm a technical trader. The reason, I don't give a shit the reason. Take it down. The only reason I might care about the reason is being an investor. So if I'm a trader, that's why we did a class on shorting. I come over here, I click short. I go short forward, man. I've got an anchor point or an apex point at the top. It's rolling over, and it looks like it's about to break the stage 3 and go into a stage 4 decline. Well, if I'm a short seller, I'm waiting on that setup. This is the opposite of the stage 2 breakout. It's the exact opposite. Alpha, right? We talk about that in the Two Selves ebook, How to Be 10 Foot Tall and Bulletproof. It's not really about trading, but it is a lot about the mindset of trading, that what you're seeing is a lot of parallels, meaning the stage 2 breakout. Well, the stage 4 breakdown is the opposite, right? A stage 3 is basically doing the same as the stage 1. 1 is the 3, right? Love, hate, love and war and all that. But I hope that helps. That's how I was looking at Ford, was a breakdown in the stage. And then where would I set my target? I look left, wherever, like, okay, look over here. Maybe there's a box here. So on the way down, it's probably going to hit that box. If that's not a target, meaning if there's a whole lot of support when I look left right here, maybe that's not a good short trade. What I'd like to see is an elevator down. I'd like to see 38 likes, by the way. MFG. 38 likes. 38. 38 likes. That doesn't make me mad at all. When I say, like to see an elevator down, and where do I think it'll hit? Where would my target be? Where it stopped before? Right. Where did it go? Where it stopped before? And right there, dude. That was 2 weeks ago. We're talking about this. It's crazy to me, man. So, I mean, that right there was a perfect money flow move. I go record this, put it on there. It's 2 weeks ago. I mean, you can just watch this over and over. And it's exactly what it did, man. I'm talking about from 2 weeks ago. This is what I would think it would do. If it does the money flow move, this is what it is. Meaning, I know what it looks like. It's what it hits. And so the risk of now risk managing that trade is you're taking that trade down. You're hitting your target. Profit targets lower your risk because now the short is smaller, but it's smaller in a gain. And we want to hold it because maybe it keeps going down, right? At least that's the way that I do it. My God, man, 38 likes. I'm seriously about to throw my phone through this monitor. Some space. And we had a pullback a while back, and I didn't bother shorting. Sometimes I'll short the SPY, sometimes I will. But on the Qs, it was like, it seemed like every dollar, there was literally a support level. And that just seemed like a lot of chop to me. Looking back, it would have traded fine. But so again, I'm doing the opposite. Just like I look for targets to the upside, I look left. Has it been here before? Boom, probably go there again. RSI hits. I'm looking to take some off. Why? All the indicators are lining up for it to turn around and go the other way. Price is just looking for balance. It runs up too high, comes down too. So right there, I was telling you, when it hits this previous low, that's where I take off profits. And then if the RSI goes extreme, that's where I take in profits. So man, we had that was such a good short, how to short a stock class. Let's see. Yeah, half the people didn't even watch it, man. Why watch it? Let's see. Too low, runs up too high, comes down too low. I simply call that fractal pattern of the money flow, man. I hope that helps. To make sense of that day. Holds it, and holds it. Well, in here, we'll have a trade that starts to come, we'll stop. And so as traders, if we've made money, let's downsize the trade because we know it's more likely to turn than it is to keep going. All right, so what we're talking about there is as this forward trade worked and price plummeted, RSI goes extreme. Now we're downsizing the trade, meaning taking money off is downsizing your risk in the trade. Like now even if it moves up, you own less shares. So you may ultimately get out of the short here, having taken some off here and some up here, and that's what? When it reverses, when it does this, when that 4 turns into a 1, right? And so if we're on the short side, we know that if over time, 71% of the time the markets are going up, this short stuff is quick money, man. In, targets, out, downsize, take my money, get out. Now I got money. I made money on the downside. And I could own it in my buy and hold and trade it over here in my trading account or put on a hedge or buy a put. Could have put on put. I mean, I don't know. A wealth of information. 38 likes. So that's pretty awesome. Let's see. That's inside the MFG, man. I mean, think about that. Like, these are people that profess to want to know shit, man. I can imagine what it would be out here with you guys. You'd be like, well, Gerald, it's not a binary day option. Then I can leverage on my grandmother's credit card and buy a... Like, I don't know, man. I don't know what people want to know. Let's see. Yeah, so just let that set up, man. Let that set up. Snow for Christmas, you got me no likes. All you had to do is hit a button. They didn't. Yeah, good hit on that, man. I like SoFi here. That's a penny stock. That's all I'm gonna say on that. I think this thing over the next year, 2 years. I don't know where it goes today or tomorrow. Let's see. What do you think of ERX? We've been adding to that. So this is one of our swing trades we're in. We're building this up. Where's my stop, which means I'm wrong? Right here. Now, some people are short oil right now. The only reason I didn't get short oil, it was trading above the 200. I figured the 200 would stop it. We get down, I don't know. I just felt like there's such a disconnect between oil and oil stocks. But it was a good move if you caught that move. And I might be thinking of downsizing it if I was on that side of the game. One reason, remember, I drew a line. We talked about it's held here before. So we know it's a possible zone where it stops. There's an easy tradable target. It's not very far away. That's the problem. You know, RSI didn't get extreme, but it got close. Last time, that's all that happened. It got close. And then we had our buy signal, which was that day right there. And why? It's the day it gets over the 5, the trigger. And today we're getting over the 5. So for me, it's all a fractal pattern. I don't know if it's going up or down. I have no idea. But I know I got to play a tradable bottom, meaning if it breaks this, I'd be out, and that would be my first target. And doing that would be this here. And most of the time, 70% of the time, markets go up. You know, I believe that. So I'm using that in my trading. I know if it goes down, it's fast and furious. If it goes up, it tends to take a while. Let's see. 38 likes. I hadn't even looked at that. I don't ever look at that stuff. Wow. Yeah, ERX is one we're playing right now. D is one, Ford. I'd be covering on some of that. That's just a few, man. All right, man. Appreciate you guys. Hey, I'm going to have some stuff out on, we're going to be doing some stuff here on Instagram with continuing on this millionaire stuff, trying to, at the end of the year, get your finances right, get your credit right, and let's keep it focused on the basics end of the year, man. Get your position right. Let's go. What's up, YouTube?